My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. With the first half of 2021 in the rearview mirror, what are the major trends that define the last 6 months? And can they tell us anything about the next 6 months so we can make some money off them? After a day where the Dow gained 104 points, S&P advanced 0.34%, new record, and NASDAQ edged up 0.01%, another new record. I see a lot to like in the second half. However, I recognize that there's some real negatives here. Breadth is bad. Treasuries seem to be signaling some sort of slowdown with yields falling to ridiculously low levels. I mean, that's why tech keeps soaring, because those are the type of growth stocks that thrive when the economy cools off. But those are not major themes. They're just the kind of daily reportage that makes you little to no money. It's not why you come here. We want longer-term trends that we can return to time and time again to make money. Tonight, I've got 7 of them. 7 tectonic shifts for 7/7, which happens to be July 7. 777. I thought it was cool. All right, anyway. First, this is one that doesn't get enough attention that David Faber and I talk about constantly. We can't believe no one thinks about it. That's an outfit called Engine Number One. You ever heard of them before this? They nominated 3 members for ExxonMobil's board of directors. They waged a proxy fight against management on the premise that the world's biggest oil company wasn't doing enough to protect the environment. And they won. The whole battle only cost them $12 million. John D. must be rolling over in his grave. The Engine Number One win was a major wake-up call to anyone who thinks you can safely ignore environmental, social, and corporate governance-focused investing. That's ESG for short. To me, it says, if you're destroying the environment, we're coming for you. Be prepared for a challenge. If these guys could spend just $12 million to win 3 board seats at the most storied oil company of all time, you better believe their strategy will be repeated, especially since it looks like the index funds sided against management. Second theme that's built to last, the hybrid workplace. And one of the most surprising aspects of the pandemic was that the ease with which businesses embraced not coming into the central office 5 days a week. What started as an emergency measure has now become commonplace. Even as the world goes back to normal, many people continue to work from home. Nobody saw this coming. Don't tell me you did. Home and retail sales have spiked as people spent their stimulus money setting up home offices in the suburbs while buying entirely new sets of clothes. They moved to the country. Some banks are insisting that people come in to install a sense of teamwork, but it looks like the majority of large enterprises have accepted that hybrid work is here to stay. They didn't twist their arm very long. Now, that has caused a boom of so many things. Housing, cars. It's a major reason why inflation spiked earlier this year. Fortunately, Fed Chief Jay Powell obviously understands that the spike in demand caused by the transition to hybrid work is temporary once we're all transitioned. So there's no need to raise interest rates because of that. By the way, where's Jay working? Third, disturbing, the Chinese government has taken a hard turn since President Biden was elected. They're clearly going for it in China. President Xi seems to be testing us almost daily, doesn't he? Most recently, with the huge losses he mandated. It wasn't about privacy. He mandated losses after the DD IPO. Mandated. I always ask CEOs of worldwide companies, what's the biggest worry? And increasingly, they're afraid China will make some kind of push for Taiwan. Now, this could easily set off World War III because our government's tacitly committed to protecting Taiwan's autonomy. Is that likely? Probably not. But the risk is much higher than at any time in decades. I think Xi will squeeze Taiwan until it breaks his way. I actually don't know how he's going to do it, but I know he's going to try. Fourth theme. While oil takes a deserved break here, I think we're going to begin to hear a lot about $100 crude. Why? Because in the first half, we got a new anti-fossil fuel White House that caused oil companies to rethink their plans. They're much less eager to drill, which also happens to be good business. Meanwhile, demand is soaring. None of this would matter if Saudi Arabia would boost production or at least get an OPEC agreement. But they're enjoying these higher prices. Look, without renewed production both here and abroad, the oil producers in the Permian Basin should see their stocks shoot higher. Crude is about the only commodity that hasn't rolled over. I just don't see how it can right now. So, Devon, Chevron, Pioneer Natural Resources. Those are your 3. They are investable. Fifth theme. We have way too many overpriced IPOs. We're in fairy tale land now, not in it really is just the dot-com period. It's 1999, 2000, where companies come public at ridiculous high levels because there's a ton of demand, and we had no idea how to value them because the venture capitalists keep bidding them up, and they're not going to let the deal come below where they just paid. And that means insiders can just tell the underwriters, here's the price. I saw this happen at TheStreet.com in 1999. Radical overvaluation by the big investors who examined the comps and thought the company's worth a fortune. I fought the billion-dollar opening hammer and tongs. We don't want an overpriced, overheated IPO market. Too many needless deals. It's like anything can go public. Hey, why don't we take public my coffee cart guy, Max Sood, where every day is Friday? It's right across the street from the exchange. No deal's too small. It's ridiculous, and it always ends badly when this much merchandise is created this rapidly, with insider selling coming up 6 months from now. And it will be just a monstrous and notorious pace. Once the insiders can sell, it is going to get ugly. Theme number 6. Ransomware attacks have gotten so out of control that we hear about them constantly. How about the ones that haven't happened? How about the smaller businesses they're targeting? I'm not kidding. They are targeting small and medium-sized businesses. I know this. We have a bunch of cybersecurity companies that are very good at stopping threats. Think CrowdStrike. Hey, this new SentinelOne, Okta, Zscaler, Palo Alto Networks. Most businesses have dramatically underspent on cybersecurity. Many haven't updated their system in ages. It's embarrassing. Child's play for hackers to break into them, especially when they've got state sponsors in Russia or China. We need to be able to play offense, which is the best defense. Just ask Deep Instinct. That's a privately held outfit we had on last week that guarantees you won't get hacked. And it's all about playing offense. Right now, we're all waiting for the next big hack. The Equifax target of our era hasn't happened yet. But I think it's just a matter of time, especially now that cryptocurrencies allow digital ransoms to be paid with hardly a trace. I don't like the criminal aspects of crypto. I've railed on that. And I worry about the stability of the crypto ecosystem, which is under attack from China and has a weak link in the form of Tether, the third largest cryptocurrency backed by questionable resources. We need to see what kind of commercial paper Tether owns. I don't know a bond guy who has sold them paper in this country. Do you? Let me know on Twitter. Call me a Tether skeptic. Finally, there are the meme stocks. I used to think that it was a decent name for the game these traders are playing back when it was just AMC and GameStop at the end of January. Oh, those were huge successes, still are, and both stocks are now basically controlled by the Reddit contingent. I think it's fine if these people want to bankroll AMC and GameStop by bidding up their stocks, allowing the companies to sell shares at incredibly elevated prices while AMC's taking a break at it. But that doesn't make them good investments, as we saw when both stocks got obliterated today. I marvel at the craziness of what's happening to the stock of, say, Newegg Commerce, a Chinese direct seller of home computer parts, among other things, which rallied 148% today on 75 million shares on a change in how it can assemble PCs to customers who design them. 148%. Memesters! The latest meme stocks feel like a game of musical chairs where people trade tens of millions of shares in stocks with very small floats. These are just one-day games where the original traders bag the stocks, then dump the stocks, otherwise known as BGL. Bag them, they gun them, and they liquidate them. They're playing BGL. I am going to examine all of this from foul play. I wish the SEC would join me. Bottom line, there are 7 themes for the 7 days of the 7th month. I think they'll have staying power, which means they can be relied upon to make you money, either on the long or short side, now that we've entered the second half of 2021.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.